Well, holy smokes, guys, Google McDougal, otherwise known as Alphabet, is absolutely crashing here today. The stock is down more than $100 a share, down around 8%, okay? And let me just tell you first off, for Google stock, that is an absolute crash. There are very few days I can ever remember in Google's history where the stock was down 8% or so, okay? Usually this is a stock that is very steady. Usually it's a stock that moves up, and if it does move down, it sometimes goes down like 3 to 5%. An 8% type move is very rare for a company Google size, because we're talking about with Google, you know, down 8%, that could be $100 billion plus in market cap wiped off the stock, okay? So I want to talk about the earnings here, which were reported. I want to talk about what numbers were missed, what numbers were hit, and I want to talk about my overall feelings in regards to Google stock, if I'll actually be buying Google stock versus Facebook stock, which one would I prefer kind of now that Google stock has fallen so much, guys. So let's start getting into this. So earnings per share came in at $1.90 ex items versus $10.61 was expected. So that's a nice beat on the EPS there from what analysts were expecting, but revenue was really troubling. So revenue came in at $36.3 billion versus $37.3 billion. So essentially meaning Google missed by $1 billion of revenue. And keep in mind, Google's usually a company, if anything, they beat numbers. So for Google to miss numbers by about $1 billion, guys, that's a troubling sign, I guess you can say there, okay? Traffic acquisition cost came in at $6.86 billion versus $7.26 billion was expected. So that was a very nice beat by Google there. Paid clicks on Google properties were up 39%. Cost per click on Google properties was down 19% though, okay? So that's obviously bad. Google is seeing decelerating growth after consistently expanding at 20% or more in prior periods. Revenue increased 17%, down from 28% a year ago. By the way, it would have came in at about 19% on a constant currency basis, but needless to say, still down big year over year. And ad sales rose 15%, down from 24% a year ago. So obviously, there's a big slowdown happening in Google's ad products, okay? And if we look at this, it is still a big slowdown, okay? It's still a nice number, up 15+%. But needless to say, this was a company, if you look at all the past quarters, it was doing anything from 18% to always up to like 24% or so. So needless to say, if you look at this chart here, it shows a big deceleration in essentially their advertising revenue. Now, in my personal opinion, I think YouTube is actually helping Google overall. So basically, they include the Google search numbers and YouTube numbers together. In my personal opinion, I think the YouTube numbers are actually helping Google's numbers a lot in a big way. But it's funny, if you listen to commentary, the CFO actually blamed the YouTube algorithm that caused lower engagement and ad revenue growth on the site. So that's pretty interesting. Even it seems Google has problems with the algorithm. I thought it was only YouTubers complain about the YouTube algorithm, but apparently it's also Google themselves, okay? The CFO was probably referring to the changes YouTube made to curb the spread of fake news and conspiracy theories. It shows YouTube is willing to forego some of the short-term ad revenue for long-term health of the company, which obviously is a very good thing overall. But in my personal, I wish Google broke out the Google search numbers and the YouTube numbers, because I bet you most of the growth is still coming from YouTube products rather than Google search. I bet you, if anything, Google search is probably in decline. Not necessarily because less people use Google search, but just the experience on mobile, which most people use Google search now on mobile devices. I think it's just you're much less likely to click on ads and things like that on the mobile products. That's my personal opinion there, okay? Q1 2019 summaries results. So if we look at this, so they did have a fine in the quarter. So if you include the fine on a GAAP basis, they had about $6.6 billion in net income. If you exclude the fine, they did about $8.3 billion, or about $11.90 a share of diluted EPS versus $9.50 if you include the fine. You know, the fine is, you know, it's one of those things, it's a one-off type thing, just like Facebook just had to take a $3 billion fine. They happen sometimes. It's just the cost of doing business as a big business, okay? If we look at their overall numbers, you know, $31 billion for the previous year in the same quarter they did in revenue, $36 billion. It's still a nice increase. Yeah, it's not as good as expected, but still $5 billion plus more dollars year over year is insane, okay? Something I want you guys to go ahead and take a look at is look at the number of employees. They basically ramped up employees by about 18,000 year over year. That is a big increase, and those aren't like minimum wage employees or something. I bet you most of those employees are making anywhere from like 70 grand to like 150 grand, okay? And then all the other employee, related costs that go around with hiring an employee. 18,000 plus employees in basically year over year. That's a massive increase. It's not quite as big of a number as like say Facebook as a percent, but needless to say, still a lot of new employees added at Google. So they're obviously ramping up some things there, okay? Now, if we look a little deeper here, we see some monetization metrics that I like to look at, okay? And what we're gonna see, paid clicks on Google properties basically showed a 9% change negative from Q4 to Q1, but that is kind of normal because Q4 usually just the ad rates are really high. Cost per click on Google properties was down around 19% year over year, so that's a little bit of a troubling sign there, okay? And then cost per impression on Google Network member properties was only up 1% year over year. Very low number there. Now, if you know me and you know Google, I love Google's balance sheet. I don't think you can find a better company in terms of their balance sheet in literally the entire world. Like, I just do not know of one, okay? Google's sitting with over $19 billion sitting around in cash and cash equivalents. They have marketable securities of over $94 billion, and they have long-term debt of about $4 billion. So essentially meaning that's the best balance sheet in the world. Like literally, Facebook's got an amazing balance sheet, but I would say Google's is even better. Apple used to have a super amazing balance sheet, but they've taken out a lot of debt to do buybacks and things like that. So Apple's not the winner. There's no one in the stock market, in my personal opinion, who's got a better balance sheet than Google. It's unbelievable. And here's the thing, I love to give value to those cash and those short-term investments because it's essentially just money sitting around. I always teach this in all my courses and whatnot when I talk about balance sheet. I always like to basically take the cash and cash equivalents plus the, whatever investments they have, subtract the debts from that, and then essentially you get a new number in. If the number's a very positive number, then you subtract that from the market cap, because essentially it's like buying a house, okay? Let's say you were buying a house, you're buying this house and you're like, oh, it's 200 grand. Well, what if I told you there was $100,000 buried in the backyard? All of a sudden that house looks like a lot better deal, right? Because you get a house for 200 grand, but there's 100,000 buried in the backyard. You get, there's the same exact, way you should think about it in regards to buying a company. If you're buying into a stock, it's not just about their earnings, it's about what they have on the balance sheet. If they have a massive amount of debt, that's going to hold your company back. They're going to have to make a ton of interest payments, things like that. But if they're loaded with cash and investments, they can use that money to do buybacks, which will obviously help out the earnings per share. They can use that money to acquire other companies, which will hopefully boost their earnings per share, things like that, right? They can pay that money out to you as a shareholder in the form of dividends. There's a lot of different things. You have to give value to the balance sheet, and that's why I like to do it like this. And I believe Warren Buffett does the same way. So if we give actual value to the cash and all those investments on that balance sheet, essentially, really the market cap you're paying for this company is around $70 billion. That would take the PE down to about 22 to 23, because obviously it's a much less big of a market cap to count against the company when you're calculating that net income versus the market cap overall. And if we look at Alphabet, once again, it's down 8+%, over $100 a share. But on a forward PE basis, if you're giving value to the balance sheet, actually, you're getting really like a forward PE of 17 to 18. Even if you're not giving value to the balance sheet, you're still getting a 21 and a half, roughly there. So needless to say, in my opinion, if you buy Google stock, let's say I go buy Google stock today, will I make money in 5 to 10 years? I almost say almost 100% with certainty, okay? There's almost no question in my mind, if I go buy some Google shares today, that those shares won't be significantly higher, 50% higher, maybe 100% higher in 5 to 10 years than today. It's what I call an easy money stock. There are certain stocks in the stock market that I call easy money stocks. Google's one of them, Facebook's one of them, Apple's one of them. Those type of stocks, like you buy them, you hold them for the next 5 to 10 years. It's almost, nothing's 100% certain, but it's almost 100% certain you will make money over the next 5 to 10 years, because it's just like, look at their businesses, okay? Even if they slow down, they're still going to be increasing those businesses, and they're like fundamental pillars in the overall economy, okay? So here's a question, okay? I'm thinking it's about time for Google to start a buyback, especially if that stock falls a little more. I think Google should do a big buyback, in my personal opinion. They're loaded up on cash, they're loaded up on investments. Go ahead and knock out a $20 billion buyback, a $40 billion buyback. You still have an amazing balance sheet over there at Google, but you'll go ahead and buy some shares back. Go ahead and bring down that PE a bit, because EPS should rise, and rise not just because the company should be more profitable, but because they'll buy back more shares. They'll take less shares off the market, obviously. I think it would be a good thing for Google overall to just, go ahead and say, hey, we're going to do a $20 billion buyback, a $30 billion, $40 billion. It's not the end of the world for them. Like, they would still have massive amounts of money on that balance sheet, okay? And then the other thing is, so if we look at the ad beasts out there, there's Google and there's Facebook, okay? Amazon's coming up in the advertising game, but still, Google and Facebook at the end of the day are kind of the beast of, advertising. It's kind of like the monopoly of advertising, right? So if I'm looking at these two stocks, I'm still wanting my money personally in Facebook. And here's kind of the reason. I like Facebook's valuation better than I like Google. Not only that, when I look at Facebook, I tend to think of it as like a younger Google, a little bit of a younger Google. And the way I imagine is like the Facebook platform is kind of like Google search, okay? The Facebook platform, what the Facebook platform represents to Facebook, the company, is similar to what Google search represents to Google, the company, right? The legacy products that will really built the company. And then if I kind of look at Instagram, I kind of imagine that as like YouTube. That's the big growth. That's, where they're getting a ton of monetization from. And that's where they're getting a ton of engagement from. And that's kind of the new frontier for those companies. And then if you kind of look at Google's rest of their businesses, they kind of have all these other things going on that they're, trying to generate into big businesses. And that's kind of like Facebook in regards to like Oculus, which is their virtual reality. And then you kind of think of like WhatsApp, and you think about Facebook Messenger. Those type of products are kind of like, their other bets like Google has, right? Google has these other things going on that they're trying to build these other businesses. That's the same thing with Facebook, where they have these other things going on. They just haven't really built them into big money makers yet, but that's probably coming down the road. So if I'm looking at Facebook, I'm just looking at a younger Google in my personal opinion. So I do prefer Facebook, but I wouldn't mind owning Google as well, because if you own both of them, there's kind of like advertisers are spending money on one or the other, okay? They're either spending money through Google or they're spending money on Facebook. That's like where people are, and that's where you kind of gotta spend money if you're an advertiser out there. If you're a small company, big company, mid-sized company, it really doesn't matter across the board. You got to spend money with, one of those two platforms essentially at the end of the day. And so I love both the companies. I just personally prefer Facebook at this point in time. And I think I'll make a better return on investment over, let's say, the next 5 years, 7 years through Facebook stock than I actually will through Google stock at this point in time. But like I said, I love both these stocks. I wouldn't be surprised if I pick up some Google stock at some point in time, guys, just because that company is very well run. They're beasts. They got future businesses that are going to continue to grow. They got their cash cow business, which is still Google search. They got YouTube, which is expanding, and they have a fortress, an absolute fortress for a balance sheet at that company, guys. So Google's another easy money stock. Hold that stock for 5-10 years. It's almost impossible to make money, guys, in that stock, okay? So anyways, I hope you guys enjoyed this. As always, let me know your opinion on Google stock down there in that comment section. Also, if you have an opinion on Google versus Facebook, I want to hear from you guys in that comment section as always. Make sure you smash that thumbs up button. Thank you for watching and have a great day.